This episode, this is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel. Okay, so in today's smart money concept trading model, we're going to be looking at the quarterly shift part 2. Okay, so let's get down to today's business. Okay, so now we talked about the look back in the previous episode on the smart money advanced trading model. Okay, so we talk a little bit about it, and we are going to finalize on the topic on it. Okay, so this is going to be the final episode about this, although not the final episode on the topic of um, the EBITDA range. Okay, as we go on into future lessons, we are going to look at the application of the EBITDA range on how to apply it to price action. Okay, so now we're going to be looking at the look back and what to do with the look back. Okay, we're going to look at what to do with the look back. So now the first thing we'll do with the look back is that we use the look back as to identify institutional order flow. Okay, so in this case we use the look back to identify what the market was doing in the last 60 days. Okay, what was the market doing 60 days ago? Okay, so with the help of the look back data range, IPTA data range, you're able to identify institutional order flow easily. Then we refer to institutional reference points. Okay, we make reference to we refer to recent institutional reference points. Okay, so what are the reference points we make reference to? Okay, the institutional levels that we make reference to. It comes in the way of old price high, old price low, bearish order block, bullish order block, and fair value gaps or liquidity voids. Okay, then anchor a vertical line to previous market shift. Okay, so this is just all we do with the look back. Okay, so let's take a look at how that looks like in price action. Okay, so in the previous episode on IPTA range, we talked about how to calibrate our look back. Okay, so the look back is like when we talk about quarterly shifts. Okay, if you are watching this this part 2 on the quarterly shift, you should definitely make reference to the part 1, okay, to get a better understanding. Okay, so now the quarterly shift is something that we expect that happens in the market in every 3 to 4 month cycle. Okay, so in every 3 to or 4 month cycle, there's going to be a market structure shift. Okay, it happens quarterly within the cycle of 3 to 4 months. Okay, so in every 3 to 4 months we are going to see some market structure shift. Okay, so the underlying trend in the last 3 months might not likely be the same in the next coming 3 months. Okay, so we should expect some shift in market structure. Okay, so obviously, how do we plant the look back? Okay, so what you have to do from the recent month you are looking at, the current month you are right now. Okay, you have to make reference to the recent month that has just closed. Okay, what do I mean by that? If let's say we are in the month of June, obviously, right? So we'll make reference to May, which is the most recent month from June. Okay, so we'll make reference to May, and that will be the first trading day of May, which is on the 2nd, right? Then we'll do the cast back. Okay, we'll do the look back 20 days 20 days to the left of the month of May, which is the recent month from June. Okay, so we'll do a 40 days look back and a 60 days look back. Okay, so now what do we do with this look back? We identify, it helps us to identify institutional order flow easily. Okay, so what has been the market structure, what has been institutional order flow in the last 20 trading days? In the last 20 trading days, okay, what has been the institutional structure? Okay, obviously we can say the market is bearish. Okay, then the last 40 days, what has been the market structure? We had a little bit consolidation, a false move, and obviously bearish. Then the last 60 days, what has been the order flow? Okay, so order flow was, kind of moving sideways, went up a bit and bearish. Okay, so now with the help of this, we're able to identify what the market has been doing in the last 60 days. Okay, let's go down deeper and and let's look at it from another perspective. Okay, so now we are focused primarily on where the market has traded from. Okay, what was the institutional order flow at that point? Okay, so now what do I mean by that? To the left of the vertical line that we have casted, okay, what has been institutional order flow? Okay, that's just what we talked about earlier on. Okay, um obviously you can see in the last between the last 20 to 40 days, in between these days, the 40 and the 20 days, if that range, the market has been trading bearishly, right? Then in within these 60 days, if that range, you can see the market made a short-term high, right? It went up to go down. Okay, so this is classical uh, market maker sell model, right? So it went up and when that, so institutional order flow can be said that in the last 20-40 days has been bearish. Okay, has been bearish on the Australia dollar. Then once we see a shift in market structure, then the market will start seeking for the liquidities above those highs. Okay, so now knowing that the market has been bearish in the last 20, 40, 60 trading days, what do we do with this information? Now the question is, where is liquidity residing? As the market has been trading lower, where are the liquidity residing currently? Because obviously we had a market that has been trading bearishly in the last 60 days. So the question you have to answer right now is, where are liquidity residing right now? Okay, obviously the liquidity are going to be resting as the market is trading bearishly. Liquidity are going to be resting above old highs. Okay, so liquidity are going to be resting above highs. Now once we see a market shift in once we see a shift in market structure, then the market will start seeking for the liquidities above those old highs. Okay, so if market was obviously trading bullishly in the last 60 days, liquidity is going to be resting below those old lows. Okay, so now once the market shifts in structure, well, liquidity is the price is going to, the price is definitely going to start seeking liquidity above these old highs. Okay, price will start seeking the liquidity above these old highs. Okay, so now we are expecting our next market structure shift in the coming month. Okay, because using the 3-month cycle, that will be the first market structure shift we should expect in the year should be in is it April? Okay, so we have, oh sorry, May. Okay, so this is the most recent market structure shift. Okay, so the market was trading bearishly, right? Then it started consolidating. Okay, so next month should see another market structure shift. Okay, so if we are to examine this from this is this year's price action. Okay, this is this year's price action on Australian dollar. Okay, so if we are to using the 3-month cycle, that would be from somewhere January. Okay, so January, February, March, then the next month you see a market structure shift. Obviously I didn't include that in this price action. Okay, we are going to take a good example as we go down further. Okay, so now the first market structure shift we should expect a year is in the month of if it is in the month of May. Okay, so prior to the month of May, what has market structure been doing? Okay, obviously it went up and you can obviously say it has been trading bearishly. Okay, so within the 40-day range, taking a look at it within the 14-day range, it was consolidating a bit, then went up, then started trading down. But clearly in the last 18 days, what has it been doing? It has been trading bearishly. Okay, then within the 60 days range, you can see it was for a while there it was bullish, right? Then it started declining. Okay, so market structure, institutional order flow can be said to be bearish in the last 60 trading days. So now once we see the next market shift, once we see the next market shift that's coming up in the probably next month, in which is the month of July. Okay, which is the second structure shift in the year, or is it the third? Okay, price is going to start seeking for this liquidity. Okay, so what does this give us? This gives us a frame, an idea that since price is going to since there's a quarterly shift every 3 months, and price is going to seek the liquidity in the last liquidities in the based on the previous order flow. Okay, in other words, what I mean by that, since we were bearish in the last 60, so now what I mean by that is since we are bearish in the last 60 days, liquidity is probably going to be residing above these old highs. So now and in this going further into the next quarterly sheet, which is coming up in the month of April, you can see the last 60 days. When we get to the cast forward, the market has probably just been consolidating. Okay, so this is just a big range of consolidation on the Australian dollar. Okay, so that is just uh, what the market has been doing. Okay, we're going to explain it deeper as we go further. Okay, now we're going to talk about the cast forward. So the cast forward is when you look ahead with the same parameter, okay, we used when we look back. Okay, so now what are we doing with the cast forward? We are anticipating the next market shift in 20 to 60 trading days. Okay, we cast forward 20 days to the right of our vertical line when the last shift was 40 days ago. Then we cast forward 40 days to the right when the last shift was 20 days ago. Now this gives us a total range of 3 months. Okay, so doing this is a way of projecting. We're having a projected 3 month limit. Okay, so what we are basically doing is that we are looking back 3 months and looking forward 3 months. Okay, we have a market structure shift that happens every 3 months, right? So now what the cashback and the cash forward help us to achieve is that, let me use, okay, now this is what the cash forward looks like. Okay, so now we are having, remember, the markets, the quarterly shift is all about change in structure within some specific number of months. Okay, we can use the 4 months or the 3 months. Okay, but in this case we are using the 3 months, right? We are using the 3 month cycle. Now in how do we do the cashback? We do the cashback or the look forward in any particular trading month you are. Okay, you use the most recent past month. Okay, so if this was December, if we are currently in December, we're going to be using November. Okay, November 1st, we're going to be making reference to November 1st, right? So now what the cashback and the cash forward is helping us to look is that it helps us to identify the order flow, okay, in the last 60 days. In the last 60 days backward, okay, what has the market been doing? Is that if the market has been trading bearishly, like we see in this our example, then the next quarterly shift that is coming up, price is going to seek for the liquidity. Where is the liquidity has been residing in the last 60 days. Okay, so now obviously we can see in the last 60 days the market has been trading down, so liquidity is resting above these old highs. So now the next quarterly shift that is coming up in April is going to seek those liquidity. Okay, that's the range that the algorithm is going to work with. It's going to seek the opposing side liquidity. Okay, so now the look back is probably to the right. Okay, so using that same second, okay, we cast forward 20 trading days, 14 trading days, and 60 trading days. Okay, so now this gives us what has the market been doing the last 20 days, 20 trading in the last going into the future. We calibrate this going to the future, expecting our next market shift to also seek the liquidity, okay, forward and backward. Okay, so now you can see obviously in the last 20 days the market has probably traded down, created a high and a low, traded back into the range, then we exceeded the 20 trading days, right? Going into the 40 trading day range, you can see it respected the range and came back, and we are still within the 60 trading day range. Okay, so probably once we get outside, once we trade outside of the 60 days trading range, we should see another market structure shift. In other words, this underlying trend should change. Okay, see that the trend should go up and go up to seek the liquidity resting above this old high or continue down. Okay, so but one way or the other we are definitely going to see another structural shift in the market. Okay, so now let's look at old price action to explain this to our understanding. Okay, so now this is a past price action data. Okay, so obviously this is the month of January. Okay, this is the month of January. I'm using the month of January to make it easier for us to understand. Okay, so now if we are currently in the month of January, how do we, and we want to do our the inter range, we want to calibrate our inter range, look back and our look forward. How do we do it? Okay, probably if you are in the month of January, you make reference, the first thing to do is to make reference to the most recent month, that is going to be December. Okay, So that's going to be December. So let's go to the month of December. Okay, so now we have January right here. Okay, then this is December, which is the most recent past month prior to January. Okay, so now we'll calibrate on January, December 1st. Okay, then we'll draw our trend line. Okay, I showed us how to draw our trend line to count the days to make it easier for us. I talked about the settings, how to set your trend lines to count the number of days as you draw your trend line backwards. Okay, simply go to the setting, you look for the style, then you look for date / time range. Okay, once you have that, once you turn that feature on, anytime you draw your trend line, you're going to get the number of days counted out for you. That will make it easier for you. Okay, so this is the 20 days range, the 40 days range, and the 60 days range. Okay, so sometimes you are going to have a number at which you're going to have a situation whereby as you draw the trend line backwards, it might skip from 39 to 42. Okay, that is because of the weekends. Okay, that's because of the weekends. That's why it's skipping some days. So it's actually going, if let's say you are calibrating it backwards and you see the number drop from 39 to some probably 41, you should know that's basically you are still counting it correctly. It is happening so because of the public holidays, because of the weekends. Okay, because of the weekends and public holidays, that's why most of the time you can see this January right here started trading from on the 4. Okay, so on the 4th of January. So that's why we said we are only counting trading days and we don't include holidays and weekends. Okay, so most of the time when you are going to be calibrating your trade line backward as it counts the days, you're going to have a situation whereby you skip 39 and probably go to 41 or 42. Okay, so it's the same thing. You just know that's plus 1 day added to that your 39 days, that's 40 days. Okay, so I just wanted to make it clear to us. Okay, now this is obviously our cash back. Okay, so now what has the market been doing in the previous 60 days? Okay, so now we have a market that has been trading bullishly. Okay, obviously it started a kind of movement down, then started trending up. Okay, so the market started trending up. So now where is the liquidity going to be residing right now, since the previous days has been seeing higher prices? Where is liquidity going to be residing? Okay, of course we have our old low right here, because the first question you ask yourself is that what is the highest high or the highest low or the lowest low in the last 60 days? Okay, that is going to make it easier for you to know where the long-term objective liquidity that price is going to be seeking for. Okay, that the algorithm is going to be seeking for. How to identify it easily is by identifying the lowest low or the highest high. If you for example, if the market is going up, you are going to look for the lowest low, right? If the market is trading down if the market has been trading down in the last 60 days, you're going to be looking for the highest high within this range. Okay, within this range, then you're going to look for the lowest low if it has been going up within this range. In this example, we have market trading up, right? So looking at this range, okay, looking at the longest range, which is the 60 days range downwards. Okay, what has the market, where is the lowest low? So this is the lowest low. So this right here is our long-term objective on liquidity. Okay, this is our long-term objective. Then these are our short-term objective, because residing below this old low liquidity, right? So now casting it forward, let's add our cast forward. Okay, so now we are anticipating a shift in market structure within this range. Okay, within this range we are anticipating a shift in market structure. We are anticipating price to seek for the opposing side liquidity, right? So now in the last 60 days, 40 days, 20 days, the market has been trading up. Okay, so now you can see we had this market that has been trading up, and obviously we had a shift in market structure, right? So let's look at how that's okay. So we had a break of structure, a break of structure, a break of structure, then obviously a shift in market structure. Okay, so this was the first shift in market structure we seen or we saw in the previous year, which was the so this is why we make reference to the previous month, that make reference to a previous month and not use the current month we are in. Okay, so obviously this was the last recent Okay, so you can see we had a shift in market structure. Then price is now, as price shifts in structure, what is it going to do? Price is literally going to seek for the liquidity that that is resting is below this old low in the previous 60, 40, 20 days. Okay, so price is going to seek for those liquidities. So now let's go into January. Okay, let's go down and you can see price, we had a break, a shift in market structure. Price returned back into a fair value gap. Okay, traded a bit up and starts trading downwards. Okay, and starts trading downwards. Now price is literally going to be seeking, and this is our long-term objective. Okay, so the EBITDA data range actually helps position traders a lot, because it helps them to capture new moves and set long-term trade objective. Okay, so as a position trader, this would have been a long-term position entry, long-term exit. Okay, so you would have gotten somewhere in right there and hold for this, because this price is going to seek for the liquidity within this data range. Okay, within this data range, and we are not expecting another market shift. We are not expecting a shift in market structure in this new year until April, or is it May? Okay, we are not expecting a shift in market structure until the month of May. So this underlying trend, this current trend that it has, that starts from, that January probably starts, okay, it should continue until the month of May, which should give us which we see another structure shift. Okay, so now this is obviously our long-term objective. So now we had another break of structure, okay, and the retracement probably into this fair value gap and a continuation. And as you can see, our long-term objective has been met. Okay, our long-term objective has been met right here. Okay, so now we are anticipating our next structure shift on the month of April, right? January, February, March, April. Okay, April should see the first structural shift in every trading year. Okay, in every trading year, April see the first quarterly shift. Okay, because January, February, March, that's 3 months. Then April we see a shift in market structure. The underlying trend in the previous 60 days, in the previous 3 months, should change. Okay, so now casting in the month of April, doing our look back, we'll go to the 20 trading day range, the 40 trading day range, and the 60 trading days range, right? So what has been, the question is, what has been institutional order flow? Okay, institutional order flow in the previous 60 days is obviously bearish, right? So where is liquidity going to be reside? Liquidity is going to be residing above these old highs. Okay, so what is our long-term objective? Our long-term objective comes with the question of what has been the what is the highest high within this, in the last 16 trading days. What was the last highest high? Okay, so this is obviously the highest high we have. Okay, so price, this is our long term, this becomes our long term objective. Okay, price is going to seek for the liquidity as we move forward. Okay, as we move forward in the future. Okay, so now the idea is to look for the recent market shift from where you are currently and work your way forward from there. Okay, and work your way forward from there. So now we saw a market structure shift right here. Okay, you can see it happened within the cast forward 60 days range. Okay, it happened within the cast forward 60-day range. And if you make reference to our previous market structure shift, you can also see it happened within the which is the one we saw on December, right? You can see it happened within the range, 60 days range. Okay, so the cast forward help us to anticipate or see a structure shift. Okay, which we, in other words, we are expecting as we go forward, we are expecting the market will shift in structure within this time window. Okay, within this time window. Okay, so now you can see obviously we had in the first 20 days we had a consolidation. Okay, the market was just consolidating. Going forward, the market was just consolidating. Then we had a kind of run on liquidity we had a push down one more time into that higher term frame, long term objective. Okay, we had a run one more time and a shift in structure. Okay, so you can see market took out this significant short term high. Okay, so we had our shift in structure, a break in market structure, and obviously we can see we have a fair value gap, right? So now we expect price to trade down into it. Price push a little bit and push down further. Okay, so this obviously didn't go into I didn't measure it with the fib, but I am sure this didn't reach into below equilibrium. Okay, so but this actually did. Okay, so this would have been an entry. Okay, so this is our long-term objective in mind. Okay, so now if we have already seen a structural shift in April, where should be the next structural shift? The next structural shift